What is going on, my people on the internets? Wow, what a week. So much craziness going on. Going to run through a whole bunch of stuff here across the board. We got to look at a couple things. Meet Kevin calling for the real estate crash. It's definitely something we'll talk about. I watched the whole video, and I'll tell you what I think there. I'm going to just kind of come back on a couple things with rent, with credit inquiries for mortgage. We're going to talk a little bit about the crypto collapse today. What's going on with mortgage rates as they're steadying very, very nicely here. And the market seems to be absorbing some things. You know, when just to kind of kick things off, I trust people who have real data. Like, I don't feel like you can trust a lot of the data out there because there's always some agenda. Like if I'm getting it from, NAR, CAR, whatever, like it's going to be bullish. So what I like to do is I like to call the big title firms. I call First American Title. They're the biggest in San Diego. And try to get a feel from them, from their upper management. Hey, where are you seeing things? What's happening on your end? And what they're kind of telling me was that we weren't seeing the normal sort of springy type activity, that there isn't that big push right here in the spring like there normally is. And they were kind of asking me questions like, what are you seeing? And I'm definitely seeing a lot of people getting pre-approved. What we don't see is as much conversion going on where people are getting pre-approved and then they're ending up in a home. A lot of people who get pre-approved are not. So a much bigger percentage of that is taking place. A lot of people are looking at adjustable rate loans. I just, locked a jumbo yesterday, it was a 7/6 ARM, 3.75% with no points or lender fees. So, there's still good rates in a lot of scenarios, and rates aren't as bad as people think, but they are definitely higher than they were, a year ago today. So let's dive into this. There's so much to go through. Going to drop some serious nuggets on here. Let me get myself out the way. Derrick Evans here, NMLS 155010. I'm a VA home loan specialist. You can call or text me. Shoot me an email if you want to buy or refi.
Yeah!
Whatever your pleasure. All right, let's go here. Let's get this out of here. Let's look at rates first. Let's just go there. We got the new number in yesterday. Did increase. I thought it might decrease a little bit. Did increase. We're at 5.27%, the average mortgage rate in the country last week. This week it goes up to 5.3. And so while that's still, not as bad as I think it could get to, what's really interesting has been watching, and thank goodness MBS Highway is back. I didn't know what I was going to do with that other site that I was forced to use. But we see here, although it is definitely still in a downtrend. We are definitely still in a downtrend. We definitely still have a lot of red candles. A couple days ago, we had a really important day where buyers really stepped in and bought the heck out of this dip at this support level here. That was a really, really good sign. And then you're noticing now we haven't closed underneath the close there. And that is usually kind of a sign that there's like big boy buyers in there. Okay, let me see if I can zoom this in a little bit more. And what I mean by that is, institutional grade, big money is coming into mortgage bonds. Who could that be? Well, it's all good, and I'm glad to see it. There's still the elephant in the room, which is the Federal Reserve talking about how they're going to reduce their balance sheet, which means they're going to become a seller at some point. That obviously is not good, but that hasn't really happened yet, and it doesn't have to happen. You see here we've got this nice little range going on, which we're actually trading mostly in the top end of that range, which is terrific. And as rates stabilize, even on a day like today where we're down 22 basis points, rates really didn't move. In fact, may have even gotten better in a lot of cases because the worst case scenario that's been priced in by a lot of banks is not happening. So they're kind of reeling back to traditional margins, expecting less volatility. They're getting it, and so they're continuing to sharpen and sharpen and sharpen. Also, I went and looked at one today where we just kind of we're always reshopping, right? We're locked with one bank. And we're looking at other banks to see if there's a better deal. And bonds would not have suggested that there was going to be some lower rate, but we got a 0.25% lower rate plus about $1,300 extra in lender credits for that buyer. Just because, banks can sharpen the pencil sometimes. Sometimes they just want to grab market share and they will just go and sharpen the pencil. So that lender we didn't even have on our radar when we originally locked that one was now at the top by quite a bit. So there's some of that going on too. There's a little more competition in the marketplace, which is helping rates stay lower and go lower, even though we're in a sideways situation. Now, the last time we had, basically so far, every time we've had a sideways consolidation, we have leveled down. And I kind of expect the same thing to happen here. You can see the last 3 times that we've been in this scenario, that box right there, then we leveled down here, and then we leveled down here. And so, most likely that will continue. But what if it doesn't? What if it builds up over here, another shoulder, and we have the perfect reverse head and shoulders to send prices higher? I mean, that could happen too. I mean, these yields are looking pretty darn good. This is a what coupon here? This is the 4.5% coupon, and it's trading above 100, but not by much. This thing's still yielding over 4%. That's not bad. I mean, if you think that the risk for this going to zero is off the table, which it is, then that's pretty good. That's pretty good to know that you could lock up, 4%. Now it is 30 years, but that's annually for 30 years. That's not bad. So I think you're starting to see investors sort of realize that. So let's jump on a couple of things here. I will go through a little bit of what's going on with the crypto crash, but not a ton. It's just something that people should be aware of. People I know have been scammed with different cryptos, and there's always a chance that some of these things can go to zero. So I do want to cover it. Rent.com sent me this email, wanted me to cover this. I just thought it was interesting. You look at month change, year over year change. Look at that, 25% plus on the 1 and 2 bedroom. This is nationally, so it's not localized. This is a macro housing crisis that we're in, and that's really what this shows us. But rent going up at those rates really should propel a lot of people into buying, and mortgage rates being up keeps people from selling because it's hard for them to make sense out of the new deal that they're getting on their new home. And which is why, let's talk about this. Let's go here. So watch this video. I'll put the link in the description. And this is from Meet Kevin, who I like this guy, and I do watch his stuff. I obviously don't just automatically agree with him, but I do watch his stuff because he's smart, and he does make good points sometimes. But this time I feel like in his mind, he wants the real estate market to crash, so that's what he's looking for. And if you find yourself in a biased situation like that, there's going to be a lot of times where you're seeing what you want to see, and you're ignoring the things that you don't want to see. And here's what his video said. It's titled, "They Lied: The Truth About the Housing Market Crash." Now, his thought was that as buying power reduces, it's very logical, as rates go up, people will not be able to buy. Homes will stay on the market longer, then prices will have to come down, and it will all crash. What's funny is he referenced a CNBC video, which is playing in the background here on this, which we know, I cover CNBC basically, so I know it forwards and backwards. They're constantly being bearish on real estate, have for like the last 5 years. They've been wrong. And what's also funny is this chart that he gets hung up on here, housing inventory year over year, you can see it's still negative. Now, yes, the amount of negative is increasing, but you still have less homes for sale today than we did a year ago by like 10%. So, and that's nationally. So he's saying this increase in inventory is going to crash the market. And, it's like, bro, we still have less inventory than we did a year ago. How do you get a crash via inventory from that? How does that crash anything? It's a lack of understanding. And he posted it on Twitter, and I saw the comments on Twitter, and someone said, why is the market going to crash? Why are people going to sell their houses again? And he said, fear. That's why. Fear of what, bro? Fear of what? People are not most people who own a home right now have 2.5%. It's only if you've bought in the last few months that your rate is higher than that, and really in the last month to get where the rates that are in the 5s and stuff like that. Like people who, we have one that's still locked, that was a long-term lock that's at 2.75. It was a builder deal, so we did a long-term lock, 2.75 VA. So there's still people closing with that. This just began, these higher rates, and the people who are getting into these homes with the higher rates are very well aware of what they're getting into. Like, they're very well aware. Here's the thing you have to understand, though, about the psychology of this, and this is why he's totally wrong about this. The majority of the people who own homes have equity and have a great rate. They feel like they did things right. They feel like they got a good deal.
All we want to do is pump you up.
When people sell because of fear, it's because they feel like they got a bad deal. meaning that they bought, now they're way underwater, or if their rate is too high and they can't refinance because they're so underwater, they feel like they made a mistake. People who made a mistake are much more apt to make a bad decision. People who feel like they've made a mistake. People who bought at a great time, have a great rate and tons of equity, they don't just sell their houses just for the hell of it, because they have to go somewhere else. So what he's actually predicting here, this is the truth of his prediction, which is so silly, and I lit him up on Twitter, and a bunch of people like that tweet, he's predicting that people are going to sell their home with their 2.5% mortgage, which they may never be able to get again. They're going to sell their home with that super low fixed rate on it. A lot of them have 2.25%, the FHA and VAs, and go rent at today's prices with today's inventory. You think that's the move that someone's going to make if they're in fear? No, if someone's in fear, they're just going to stay put. So if fear hits the market, they're not going to go anywhere. Why would they give that up? There's no better solution. There's no better solution to switching your housing scenario for 99% of the people who own homes. So it's just silly, backwards. It just clearly do not understand the psychology of how this works. In the crash, when the crash was happening, we had people who were underwater on their homes significantly, and they could rent a home. There were tons of homes to rent. They could rent them for way less than what their mortgage payment was. So in their mind, they made a mistake. Oops, I bought at the wrong time. Whatever. I'm upside down. I'm just going to just bail and go rent this house over here. We don't have that right now. Rental inventory is so tight. Rents are going up so much. Why would you trade the certainty of your 2.5% mortgage for rent that's going up 25% year over year? It just makes no sense. And I'm sorry, because I like this guy, but he's so wrong. Here's the good news. With people like him being so bearish, it actually helps prevent a crash. As I've mentioned before, you cannot crash. A market cannot crash if everyone expects it to. The only way it can crash is if everyone thinks it's not possible. Because part of what a crash is an unexpected move. And we're going to talk about that in crypto, about the crypto stuff here in just a second. What happened there with Terra Luna and UST, which is really, really crazy. So he's wrong, dead wrong, and you just need basic logic to understand it. Yes, inventory can go up. That's fine. Yes, prices may, depress a little bit. Maybe they'll come in, 5-10% or something like that. Is possible, slowly. But with this lack of inventory, which is what he rips in here, said, everyone on TikTok saying there's not enough inventory. No, it's going to get. Yes, that matters, bro. That is the thing. And inventory is still very low, even though it is creeping up a little bit, which is good for buyers. It is good. It is not going to crash a market. It's just one thing amongst one ingredient amongst a whole soup of things. And it's not enough by itself. Rates going up, inventory going up is probably not enough. Just those two things. It's just not for a crash. You need a lot more than that. So sorry, bro, but you're wrong. And I will continue to bury you on Twitter if you post this crap. Count on it. Another thing I want to remind everybody about, I want to include this link again. I did a video about this a couple years ago. Mortgage inquiries don't hurt your credit score anymore. They haven't for years. And it's because what happened was basically, there were some shady lenders out there doing a bunch of shady stuff. One of the things they were doing is they were telling people like, hey, okay, we got your loan approved, but don't run your credit for any reason at all, or you could screw up everything. So they were trying to discourage people from shopping. That made its way around. Legislators put pressure on credit bureaus. Credit bureaus removed that. And you can see it's very plainly written in here. Let me just show you. The newest scoring systems from FICO and VantageScore will omit the inquiries for mortgage applications. This means you can shop around for the best rates and terms for your loan without being penalized. That's all you need to know. That's all you need to know right there. But I'll put the link in there so you can check it out. Share this. If you're a realtor or a lender, a lot of people watch this who are in both professions. This is a good link to share with buyers, because a lot of buyers are very hesitant about being pre-approved. They're very hesitant about having their credit pulled. This is the way to kind of let them know like it's not going to be a problem. The inquiry will be recorded on your credit report, but it will not hurt your credit score in any way. All right, let's go over here, do a couple stories, and then we'll talk about crypto. So regulators growing anxious about stablecoins after Terra Luna's collapse. Okay, wait a minute. So that's going to be at the end here. Grayscale, adjustable rate, mortgages, demand. Yeah, and so ARMs are playing a factor right now for sure, especially in the jumbo space or in the high down payment arena. Low down payment arms really aren't available, and but rates are better than people think, is what I have noticed. I think just a lot of people are maybe getting quotes from mortgage banks or some of these big brand names that have very high expenses and therefore, do not have the best possible deal. So for anyone who wants to get a second opinion, about, hey, is this really a good rate that I'm giving, or I'm being given? Email me, text me. All I need to know is loan amount, purchase price, or home value if it's a refi, your credit score, and whether it's condo or detached. Give me that information right there. I will get you a rate sheet so that you can see if it makes sense for you. What's happening, right now is, especially the last, I'd say 3 days or so, since we got the CPI number and we had that really big rally in mortgage bonds right here, this guy right here, this wick right here, that was a really strong sign. And since then, I think since the market saw that, rates have kind of been dropping, even though we're just sideways on bonds. So I think that's a really, really good sign. Okay, let's take a look. So what is going on? So I mean, just overall right now in real estate, the market is starting to be more favorable to buyers, but is 100% definitely still a seller's market. Don't get yourself wrong. There's more opportunities for buyers, no doubt about it. There are some listings where you're seeing price reductions. There are some, situations where you could come in to a place that doesn't have any offers yet, and maybe you can set the price or dictate a little bit more of the terms. And that's just been unheard of for so long that I think it's really good for people to know that if you're a buyer, that you have a little bit more hand than you have in the past. Okay, regulators anxious about stablecoins after Terra's stunning collapse. So in case you haven't seen this, that's the Bitcoin chart right here. I added these. So UST is a stablecoin. You can see up here, it's pretty much pegged to the dollar. Pretty much stayed at a dollar. But the problem is Luna, which it's pegged to, and this gets complicated. I honestly don't even understand it completely, but it's pegged to this other cryptocurrency. It's trying to peg to the dollar, but it's attached to this other cryptocurrency, which we'll look at in a second, which has completely collapsed. And this is supposed to be a stablecoin, so it's supposed to be worth $1. Right now, it's worth 12 cents. So this has crushed people. Supposedly, and I don't know if this is true or not, there have been a number of suicides over this, which is so sad. Guys, it's just money. At the end of the day, there will be more opportunities. Please, it's definitely not worth it. If you have a dark day like that, just think about how amazing the story is going to be when you come back from it. But I keep seeing this thing go lower and lower and lower. And some people have asked, like, hey, should you invest in this thing? It's a fraction of a penny. This was trading at, $100. Just how many days? A couple weeks ago? Trading at $100. And now it's a fraction of a penny. So this is the one that really smoked everybody. And it's crazy because this crypto and the guy who founded it, Do Kwon, he invested in Bitcoin as the reserve currency, and he deployed billions of dollars into that, and they came after him. This is a Wall Street hit job, guys. You want proof that big institutions are in crypto? Then here's your proof. They spot weakness, and they will come for you. If there is easy money on the table, they will come and they will take it from you. That is how Wall Street works. And unfortunately, people in crypto, they really are too nice. They don't get it. They don't understand the shark element, the piranha element of Wall Street. And this is sort of the proof of that. He's just kind of rolling around, posting pictures of his baby on Twitter and oh yeah, everything's all good. Yo, we built this project. Yo, hey, yo, you're getting smoked, yo. Pay the attention, bro. Look what's happening to your project. It's getting melted to nothing. I mean, look at this. The performance down here says minus 100%. I've never seen that before. Smoked. And that was what really, really caused a lot of panic in sort of the crypto space. Now, some people reached out to me because I invest in the Gemini US dollar, and they were like, hey, is this Gemini US dollar, is this, in the same boat, or is it risky like this, UST, which is the Terra Luna stablecoin? And I was like, hey, all you have to do is just look at the chart. The difference between Gemini, and this is why I say always buy, if you're going to buy the Gemini US dollar, which is paying 6.9% APY right now, daily, pays out daily, 6.9 APY for the year. it is not connected to anything. It has no pay, is not attached to anything. You buy it directly through the Gemini website, okay, Gemini.com. You get it from them. They have claimed, they right on their site, we will always give you $1 for one Gemini US dollar. So whenever you're ready to take your money out. This on here, the reason why you see the fluctuation on here is because there are other exchanges that also sell the Gemini US dollar. But look what happened. When the collapse happened, this is it right here. See the spike? Money flowed in to the Gemini US dollar. So people were essentially selling the UST and buying the Gemini US dollar. So that right there just kind of shows you there's a lot of confidence in the Gemini US dollar, and paying 6.9% right now in this market is pretty darn good. So for me, I feel totally fine with it. I definitely have, some coin in there, but I feel good about it. I don't feel there's any reason to be concerned about it at all. The guys who are running this at Winklevoss Twins are very smart. They have their act together, have regulations. They understand everything. I don't have any concerns. So that's me personally. If you feel like it's not for you, if you feel like there is something, there's some risk here that you don't like, don't do it. Just don't do it. You keep your money in your savings account. They won't give you any money for your money in your savings account. The bankers are. That's just what they do. They're not giving us this rate hike. No. That's for them. They're going to pocket the difference. So if we look at, we saw what kind of happened with Bitcoin. It wicked down to, I believe, 25.5. And most likely, unfortunately, we're in the middle of this range here, this downtrend. We are now in a downtrend. We're tracking the downtrend. You can say official bear market. You can call it whatever you want, but we are definitely in a downtrend now. The macro uptrend is gone. This is what the downtrend looks like. We're in the middle of the range. In the past, when we've wicked down hard like that, usually we come back down and sort of take out that low before we turn around and come back the other way. So unfortunately, I do think there's more pain in store for Bitcoin, probably going to come back down to the 25,000 range at least. And, and it's going to kind of leak slowly over. I expect the type of action that we saw here. That kind of action is what I'm expecting. Leaking lower before we take the next leg up. Just wiping people out, getting people out of the way. That's my guess. Who knows? Anything could happen. Could go up, could go down. But I do feel like it's not a bad entry point here, especially for people who haven't invested at all. To start your cost basis in the 20-some thousands for Bitcoin would be really good, versus a lot of people out there who are invested heavily in it, including myself. So that's kind of a quick rundown of what's gone on. If you've heard about Terra Luna or anything that's gone on in crypto, it did cause a lot of things to get out of whack in the crypto space. But meanwhile, over here in traditional financial markets, there's still been a lot of volatility, and we are down approximately 15%, or so. I actually charted a couple things. Shows that here's the thing that's really got me just sort of blown away that I really am trying to figure out. How is the dollar running so strong right now? How is the dollar running this hot? Look at this. We're in a multi-year high. I don't know. Is this an all-time high in the dollar, in the DXY? I mean, look at this. I'm going back to 2004. So the dollar today, according to the DXY, which is the dollar index, stronger than it's been in 15 years. How could that be? Does that make sense to anyone with all the inflation? I mean, do you feel like you're getting more for your money? No. What's happening is globally, the global economic situation is so much worse than it is here that the dollar is gaining strength. That does not make sense to me, but that is what is going on. So that is also hurting everything that's paired to it, such as gold, which is around 1,800, silver, Bitcoin, etc. All those things are suffering as a result. Here's the NASDAQ. The NASDAQ, just a very typical head and shoulders pattern here. You got to see that coming, and there it is. And then we've sold off from there and taken out some key support areas. So it doesn't look great, even though you have a little rally today. It just doesn't look great there. S&P very similar, except for you got a couple of shoulders over here and both lower than the left shoulder. Also not good. That's why you see the sell off here. And the Dow Jones is in kind of a similar downtrend, looking downtrend to Bitcoin, except for the Dow Jones is low to the lower end of the channel, whereas Bitcoin's kind of in the middle of its channel. So yeah, none of these charts look good. I have no good news for you here, but I'm keeping an eye on all of this stuff now because the whole market seems to be confused about what's going on and not sure what to do. But another thing that I will mention about this before I put this one to rest. Meet Kevin did this whole thing about interest rates going up, causing prices to go down, and didn't cite any historical data like I have done on this channel, which explains, and you can see it, and it's very, very clear when rates spiked up in the past, which we've seen. You know, we saw these huge spikes in the late 70s, early 80s. Real estate values during that time just slowly edged higher the whole time. There was no dip. There's no dip. So if you would just take a quick look at history, you'll see even when rates have gone from 7.5 to 18.5, you didn't see a dip in real estate values during that time. Isn't that crazy? So I just don't feel like there's any reason to be worried about a crash at this point. And if that changes, I'll for sure change my tune. I just don't see it right now myself. So I will shoot you straight, of course. All right, I'm going to make some calls. You guys have a great night. Have an amazing weekend. I appreciate everybody who supports the channel, every freedom-loving American out there. God bless you all. Have a tremendous weekend, and I will see you again soon.